In this course, we are going to buy a put option. And what we're going to do is identify a candidate, a suitable candidate for the put option. Then we're going to try to create a trade rationale. We look at charts, we look at the analysis and see what the charts are telling us. And then once we know what we want to do, then our decisions are based upon the choice of expiry series, the choice of moneyness, and then we'll also look at margin requirements, the Greeks, and the profit and loss and stuff like that. The candidate that I've selected is the FXE. The FXE is the Euro ETF. So the FXE in general will mirror the US dollar Euro spot trading rates. So here we see that the Euro is currently trading at about $131.93. So this is the FXE. And if you look at a 1-year chart of the FXE, we can see that it hit a high last year in May of about 148. And since then, the euro has been on a downtrend. Whenever you see a chart from the top left to the bottom right, you know that's a clear downtrend. The euro is on a long-term decline against the US dollar. Now, also, if you notice, the last few days the euro has been going up. So it was at the 130 level about 2 weeks ago, and then since then it's just been steadily moving up. So why I'm choosing this as a candidate for my put option is if I can see the previous 3 to 4 months, it goes up, it comes down, it goes up, it comes down, it goes up, it comes down, and it's just finished its 2-week up move here. I expect it to come down to about 130. I think we can make a quick profit if it does that. And so I want to buy a put option. So I want to capitalize on the move downward in the euro. And this is in keeping with the overall trend, which is a downtrend for sure. So that's my choice, the Euro ETF, and we are going to put a put option on the FXE. So let's go and see what we have on the options chain. So we can see we have a weekly series. We have May, June, September. So now the choices are, which expiry do we choose first of all? So let's look at the June has about 49 days. Now, if we go back to our charts, I think in the next 49 days it should be possible. But if possible, I want to give it a little bit more time. So as long as the prices of September are not exorbitant. See, the problem is there's no July and August here. If you see, there's June and then it jumps directly to September. That's because we already have 2 near months options already here. Now, as soon as the May expiry series is over, the July will open up. And then when the June gets over, the August will open up. The reason we have September, December and everything, because these are quarterly. Let's look at June and see if we can get a decent put. So that's what we're looking at in June. And I want to see my Greeks on this one because I want to get an idea of what kind of theta I'll be losing. So here in the June series, at the money options, I'm going to be losing about 2 cents out of a total value of about $1.45. So I'll be losing 2 cents, and let me see what the September option looks like. And if we go to September, my theta is 1 cent, and the cost of the option is almost double, but that's because we have all these days left. So my preference is I think I'll go to the September for this trade, and I want to be a little aggressive. I want to buy a little in the money option because I wanted to gather steam. I'm quite sure that the FXE will probably trade down to the 130 level. So if we look at the 134, 135 put, we'll be paying $5 for this put. But if it does move a couple of dollars, this 550 should become around 670 or 685. So that would be about a 25% return. So that I think makes sense. Let's look at the 550 put. and I'm going to buy, and because this is a small ETF, I'm going to buy 20 contracts at the 550 level, at the 135 strike, and let's just look at its risk profile and see what it looks like. So this is where we are today. It's trading at 132 almost. So I expect it to go down to about 130. So if we hold this option to expiry, then our break even becomes 129.51, because we are buying an in the money option. This is slightly more expensive, but I feel it's going to optimize our move better. So, as soon as it starts moving down, we're going to see profits on this position. And we've given enough time so we can withstand some pain if the euro still continues to go up a little bit. It's highly unlikely it's going to cross 133 anyway. The Europe nations are just not in a strong position, so their currency is going to take a hit. And so over the next 2 or 3 months, this should probably come down to 130, 129 level, and we should be able to book a nice profit. So I'm going to watch for this, and it looks like a good trade actually. And our maximum loss on this trade is 11,000. That is if the euro expires above 135. So in my opinion, that's highly unlikely. So that's what we're going to do. We're going to put this in the money put on the FXE and see how this trade works out. We'll be checking in every 3-4 days, and we'll catch up on it. So I'm going to put this order, create the duplicate order, and what I'm going to do is I want to pay 545. So it's 20 contracts, so that's 2,000 shares of the FXE at the 135 put. This is an in the money put. You'll see that our break even is very close, and that's the advantage of buying an in the money option. You're going to pay a little more because you saw that the at the money options are going for about $2 and $3. Here we are going to pay about $5.50, but it will optimize our down move very well. And most importantly, I don't expect the euro to go up to 135 at all. So this is one of those situations where I would definitely buy an in the money put to optimize the position. So that's exactly what we are doing, buying 20 contracts of the FXE at $5.45 a share. So I'm going to put this order in, and let's see. Yep, it got filled. So we are in on the FXE position. All right, so we'll monitor this position, and I'll see you back in about 3-4 days. Welcome back to the trade on the FXE. The FXE is the Euro ETF, and we put this trade about 5 days ago. And what we did was we bought a long put. So we bought 20 contracts of the long put at the 135 strike price, and we gave a lot of time for our trade. We gave, there's 142 days to expiry. And what we can see is we paid a price of $5.45 per share. So for 10 contracts, that would be $5,450, and for 20 contracts, that would be about $10,900. Now we can see that it has made a decent profit just in the last 5 days. So we have a profit of about $1,200 on the FXE. Let's go take a look at the charts of FXE, because we have a lot of time for this trade, and I want to be sure that whatever we do, we do it properly. So this is today's trade, and you can see that the euro has crashed today again. Euro problems are not going away. In fact, they are increasing, and the euro has been in a downward trend. So our selection of the long put was perfect for this kind of a trade. But we do have a nice profit here. So what I want to do is go back to my monitor trade. I still think it can come down to even below the 130 level. I don't want to close out my position, even though we have a $1,200 profit. But what I want to do is take some profit off the table, and therefore that gives you much more room for the others, for the trade to play out some more. So let's come here. We've got 20 contracts. And what I'm going to do is I'm going to take just 25% of that. So I'm going to take 5 contracts off the table, book our profits on those 5 contracts, and let the other contracts still run and go on from there. So we got our fill on FXE. Now you see we have only 15 contracts left. We booked a profit. We had a profit of 1150 on the day. We booked some of the profit. We still have $900 profit on the positions that we have open. And our theta is only $17. So we are losing only $17 on a daily basis. So that's very little theta decay. That's because we have 142 days to expiry. So we've gone out a long time. This is a September option. So we've gone out a long time on this trade. So we did take some profits off, which is always a good practice. But again, you have to let this trade also run because it's got a lot more room to go, I believe. So let's see how that works. We've got a $900 profit on this. We'll just monitor this trade and come back to it in another 3-4 days and see how FXE is doing. If it goes down to the 129 level, then we'd probably take about 5 more contracts off the table. But for now, we're going to leave it like this. It's looking good. We probably can see FXE going down to about 129 level. At that point, we should have a profit of $1,800 or $2,000. So we'll take off some more at that point. But right now, we're going to leave it at 15 contracts of the FXE. We booked profits on 5 of those contracts, but we're going to let the other 15 run. I'll see you back in a few days. So this is the next installment of the FXE, which is the euro. And what we did was we bought the September 135 put. So the euro is currently at 130. And if we recall, I think when we put this trade on, the euro was around 132 or close to 132. But since then, when we looked at the charts, it looked like a good bearish bet, and that's exactly what it's turning out to be. And today we have an even bigger profit here. We have a total profit of about $1,500 on the FXE. 3 days ago or 2 days ago, we took off 5 contracts because we had a nice profit. So we've actually already booked about $500 profit on this trade. And today we see that it's a nice profit again. So it's always a good time to take some profits off. The French elections are this Sunday, and I think the euro is going to go down even further after that. So we want to play, we've got a nice profit here. We've got $1,500, and this is a currency play. So unfortunately, all these macro issues start becoming a factor. And especially when we know that this election is happening and there's uncertainty, then I think it's safe to book some profits on this. We've got a nice $1,500 profit, and plus we've already booked about $500 profit on this trade. So what I'm going to do is, out of 15, I'm going to take half off. So let's say instead of selling 15, I'm going to sell 7. So what I'll be left with is 8 contracts. But what I would have done is that I would have, okay, so that got filled. So what we would have done is, now we have only 8 contracts left. So we booked 60% of the profit on this trade, and now we've just let 40% still lie there. Now, if on Monday or Tuesday, if the euro goes even further, my ideal exit point would have been about 129 or 129.5. We've taken about 60% of our profit off this trade. We are already up, I would say, somewhere between 800 plus 500, $1,300. We've already cashed in $1,300 on the euro trade. So, and we've left about 8 contracts to ride out through this weekend. And let's see what happens in France and what kind of an impact that will have on the euro next week. So that's as far as the FXE trade is concerned. We'll come back to it next week. Welcome back to the FXE trade. This is the Euro ETF. Today is 9th. And what we have is more chaos coming out of Europe. So that's having an impact on the euro. And you can see the euro is down another 61 cents today. I think we looked at it last on Friday. We had we already had a nice profit. I think we've taken 2 rounds of profit on this trade. So we are already up about, I would say, somewhere between 1200 and 1500. I have to go back and check, but somewhere between 1200 and 1500. And we had left the last trade. What we did was we took off 7 contracts. If I'm not mistaken, the price at which we took off was about $6.50. So we had already made $1. And today this price is at 7.55. It's always a good idea to take profits off the table. There's no question about that. But how much do you take, and when do you let it run? Now, in this case, the euro seems to be in a downward trend. And if we just look at the charts quickly, what's going on with the euro? Let's go to FXE. And yeah, you can see that the last 5-6 days has been on a steady decline. It's already gone past our, I was thinking we'd take the profits off. We'll close the trade around 129, maybe 129.5. But it's already gone below that. It's at 128.86 today. So there's a very good profit. Now, whenever things fall too much, so it's fallen from 132 to 128.8. That's a pretty big drop for a currency. And so I'm expecting a near-term bounce at some point. Maybe tomorrow, maybe the day after, but at some point there should be a near-term bounce. But then the chaos in Europe continues to unravel with Greece as well as France, and the general mood is very negative. So the euro could go down somewhat, but let's go see our position. We've got a nice, almost a $1,700 profit just on these 8 contracts. So we had already taken off 2 rounds of the FXE, and now we are left with about $1,700. So this is that's the number you're looking at, 1680. So then what I feel it's time to take some more, but maybe not close out the whole thing. So what we'll do today is we can, instead of selling 8, perhaps we can sell 3 or 4. I'm okay with either one. Let's sell 3 so that, we book some profits and we can sell it at 755. So let's sell it at 755, take some more profits. So yeah, we got filled there. So what that means now, if we look at the FXE, so now we still have a profit of $1,000. So we booked almost $700 profit today. So we've booked profit on 3 different rounds on the FXE. And this is what you should do, because when your positions are doing well, take the profit, but don't take everything. Just take it in little tranches. But of course, that all depends on your outlook for the stock or the security. So in our case, I think the euro mess is still going to go down, but we could see a near-term bounce, because whenever something gets oversold, you always catch a near-term bounce. So I don't want to get caught with that. So we'll come back and take a look. But this trade is doing very well. We've almost now captured close to $2,000 on this trade, and we still have a $1,000 profit on this trade. So the euro has been going down. We took another profit today, and we'll come back and check it out again in about 2 or 3 days.